I knew that I wanted my roots to be in the country. I wanted to raise my kids in the country, and we've done that. I mean, they've been raised shooting and riding horses and doing what they want to do, and I think they've stayed close to home at Tarleton for those reasons, so they can, still run around and do it. And okay, where am I seeing results? Where am I seeing benefit? And for me, it relatively quickly, I'm a believer in the warm lead. If you ever had an entrepreneurial thought or spirit, you're a hustler. And I don't care. I watch it at the gym. I watch it with my kids, and me and my wife, we've taught them just like, let's hustle.
Welcome back to the Wealthy Cowboy Show. Today, we're going to talk about a pretty important topic that I think y'all will be interested in. Ag finance, ag banking, ag lending, all that falls under that category, I guess. A big thing I hear all the time is like the thing that people think is holding them back is capital from starting in the farming or ranching business. So we're going to talk about that, talk about opportunity, also talk a little bit about the opportunities of maybe you want a career, maybe you want to go into ag lending and be a lender. So we'll talk a little bit about that too. But we got Chad Alleva on, and we're going to get into it.
We're just going to do this.
Yeah.
I'm here. Yeah.
We always start. So that's what we're going to talk about. But we always start with, where'd you come from? What's your background?
Where'd I come from? Well, I grew up in Mansfield, right down the road here from the podcast. Attended the Tarleton State University. So graduated in 1999 with an ag business degree. Had an opportunity to stay on as a graduate assistant. Taught a couple of classes, stayed on to complete my MBA. And through an accident at a red light, I started working for Farm Credit. Been 25 years last month. So I still have some affiliations with Tarleton, teach an ag eco course, teach a couple of money and banking, economics of financial markets courses. If you're ever bored, you can sign up for those. But got two twins there now that are 20, and we have an 18-year-old that'll be starting Tarleton in the fall. So we're trying to keep that tradition going on. My wife and I live north of Stephenville now in Morgan Mill, and I've been right there, never left since I went to college. So stayed in the area and been with Ag Texas there for 25 years.
What drew you to ag finance? Like, did you grow up in agriculture, or how'd that come about?
FFA. I owe all this. Grew up from a country background, country family, but of course grew up in the Metroplex. And ended up from seventh grade on, there was a veterinarian right down the road, Old West Animal Hospital in Mansfield, Dr. Kevin Munn, and owe him my start in agriculture. But I started walking dogs at that clinic, and that led into baling hay for him, feed store jobs, FFA in high school, showing heifers, and that's when my passion for agriculture started, and I knew that's the field I wanted to be in. And I'm sure we'll talk about more of it later, but it's a high barrier to entry. So how do you go from point A to point B? Went to Tarleton, knew that was the ag school to be at. And through my ag business degree, I started really having an interest in the economics and finance side. And there was a brief moment where I thought, maybe a PhD in economics was in my future. In fact, I had applications out to OSU and Purdue and Rice. And really kind of by the time I got to my capstone class in MBA, I just fatigued on thinking about going for that next degree. So, and
if you got a PhD, would you have just been a professor, or where would that have gone?
At the time, I was really interested in stats, econometrics, or being a professor back at Tarleton. And those were very different paths, but there was Stone Agriculture that was releasing economic data in agriculture. And I was always fascinated about that stuff. We had a quantitative analysis class where we worked in that quite a bit. And I thought, this kind of, it's interesting to me when you look at the trends, the cycles within agriculture, where things are going, the predictors, linear predictions on what's going on. That kind of really captivated me and held me. And then really toward the end, it didn't feel like a fit either. And I don't know if it was the thought of going to college for 4 more years, or I just started gradually seeing like, maybe my future is closer to Stephenville. I loved that area. Worked for a ranch in Morgan Mills. I ended up living out there and bought my own real estate and all that. He was a retired agronomist for Tarleton. So my roots started getting, by accident, tied to Tarleton, tied to Morgan Mill. And then one of my ag finance professors, Joe Bob Huddleston, he at the time was the branch manager at Ag Texas in Stephenville. and ran into him at a red light. And he asked me if I was headed to law school, which that was never on the table. Maybe it should have been, but it never was. And I said, no. And he said, hey, we've got an opening here in Stephenville. And so I went the following Monday and interviewed. And so it was somewhat fate, a little bit of an accident that I ended up in ag finance. But when I was looking, when that opportunity presented itself at the red light, and then I was kind of driving and thinking about it, farm credit, I didn't know, I knew I wanted to stay in agriculture. I mean, that's where my passion was. To me, there's no higher calling and then working with the land and feeding and clothing the world, So that was already deeply in me. But really, what's the next step? Is it pharmaceutical sales? I had an opportunity to maybe go into seed sales. And I just didn't know what that step was going to be. Well, when I back up, farm credit tied together the economics, tied together all of the finance classes I took through my MBA, kept me, maybe I'm not going to be in agriculture, but I can talk to someone that is every day. Mm-hmm. All of my clients, and I deal with the greatest clients in the world. I mean, that set of ethics and morals that comes with an agricultural background, I mean, I wouldn't trade for it. So when I really thought about that, I was like, you know what, this might be it. I mean, this might connect A to B that I haven't figured out. And it was, and 25 years later, we're here. So,
and that's what we talk about that all the time on here is like, that's the dream for me and a lot of people, I think, is to be, involved in agriculture and like have your own farm or your own ranch or whatever, is the dream to own your own operation. But, sometimes the stepping stone to it is being parallel to the industry. Like I'm hard to describe, I guess. I've chosen the credit card process, and I still, like you, help a lot of ag clients and stuff and kind of parallel, but that also allows me to have the freedom to do this and also still go ranch on my own and stuff. So I'm still involved. So it's split, but I talked to a lot of people that are like, I wanted to be involved in agriculture in some way, in ranching and farming, rodeo, whatever it was. And instead of like being directly involved, I just got in a parallel business to it to where I'm still involved in it. And I'm also, making a living. And, the goal is to eventually have my own or pay it off or whatever it's going to be.
Yeah, no, that's it. And my parents were always super supportive in any path I wanted to take. And so, even though my dad's background was in sales, he was a buyer for the Army Air Force Exchange. So he had more of a military tie and traditional sales background, businessman. My mom was in education her whole career, but they still, when I decided to go that path, they were all in. I mean, and I was fortunate in that and just luck. I mean, fell into the right spot, but you're right. I paralleled it. I eventually bought my first piece of property in Morgan Mill in 2000. We added a little to it here a few years ago, and it's tough. I carved out my little pie, run some cows. We got a couple of horses, a few dogs scattered around, bale a little hay here and there with my father-in-law. And, it keeps me doing what I love to do when I'm not at the office. It's all funded by what I do, but then my relationships with my clients. I mean, yeah, I'm paralleled it. I feel like I'm a partner in some of their operations. I mean, ag lending is certainly a relationship. I mean, there's a lot more service points and touch points than financing cars in and out of daily at a dealership. Yeah. So, yeah, it's the path was unknown, but at the end of the day, here we are. So,
I think that's one of the, like the best and worst thing about agriculture is like it's so romanticized and like people love it so much that you're willing to sacrifice everything else to stay in it, even if it's a bad business decision or whatever, So it's kind of up and down because I don't know. It's just something that draws even somebody like I heard a good, I guess like analogy of, I don't remember where I heard this at, but they were talking about how everybody wants to be connected to the land in some way. And they were talking about like, even in big cities and people that live in high-rise apartments and stuff, they'll still have a lot of times have plants out on the windowsill or on their patio or
urban
something.
Farming. There's a name for it now.
And they were talking about that, and they were like, yeah, even people that live in the city in a high-rise apartment, still want to be connected to nature somehow. DX Trailer Sales is based out of Lubbock, Texas, and it's definitely not just a trailer dealership. If you are involved in the Western way of life, and if you're listening to this show, you probably are, they have something you need. From trailers for a day working cowboy to a full-time cattle hauler to hay trailers for a farmer or rancher to arena drags, rope and chutes, and feeders for the rodeo cowboy or cowgirl. They also deal in every kind of hay any of your animals could ever need. Literally anything you need for farming, ranching, or rodeoing, they have something for you. And it's gonna be at a super affordable price. Besides all that, everyone you deal with there is super friendly and helpful. We just got new custom flatbeds built for our pickups, and I also got probably the coolest trailer you've ever seen built. And you can stay tuned for a video we're gonna do, and it's gonna show all of that and some more of their products also. So check out DX Trailer Sales on Facebook or dxtrailers.com.
Absolutely. And for me, I had identified Mansfield was growing through itself. I graduated in 95 from high school, and it was already transitioning in a hurry. And I wasn't to the point yet of being married or having kids when I was thinking through these things, but I knew that I wanted my roots to be in the country. Mm-hmm. I wanted to raise my kids in the country, and we've done that. I mean, they've been raised shooting and riding horses and doing what they want to do. And I think they've stayed close to home at Tarleton for those reasons, so they can, still run around and do it. And whether it was romanticized to me or I just loved the hard work. I mean, there's nothing like coming in at the end of the day and seeing what you've done and going to bed with that kind of tired. Mm-hmm. And you can miss some of that in banking. There's days that I talk on the phone for 4 or 5 hours of talk time, and I don't really know what I did that day. But and my wife not sure what I did either. But when you do something on the farm or ranch, you're tied to the land or you're tied with an animal. It's a different kind of tired, and you can measure your progress, and you can see that there's some fruits of the labor I just put in. And I think a lot of people need to be fed that way. I think our minds are meant to be fed that way. Mm-hmm. So agriculture naturally feeds that.
Back to your first job there. Like, what was your entry level position?
So things have changed a lot in the years on how farm credit works, but I started straight in as a lender, which back then we did our own credit work. I mean, you were the full touch. We had a great support staff, but I mean, from meeting with the client to putting together my loan file, to getting it decisioned, which, whoever above me, depending on my delegated authority, I did all of it. And then all the servicing conversations that went on, all the marketing to find new clients. We were strictly a PCA, production credit back then. So they were all, mostly I handled beef cattle, but cow-calf, some smaller row crop farming back then still in our area. And then in 2002, we rechartered and brought in the real estate side. And then, you were networking and growing real estate, plus managing a production portfolio to go with it as well. But I came straight in as a lender, and it was trial by fire. I mean, I had some great mentors that taught me their philosophy about ag lending, philosophy about lending. There's things you can pick up from a textbook, but it's a different feel when you're in banking and on the other side of it. And, and it was, I kind of grew with the company then. We didn't know it, but we were fixing to just explode and have a rapid growth. And I was there for that. And, that allowed me to kind of learn as I went too, and just sort of have a really nurturing environment by default, good people, good mentors, a slow, steady growth, and just took it from there.
When was Ag Texas started?
So Farm Credit was chartered in 1916. So you got to go back to the Farm Credit roots. We've been around a long time. Ag Texas was chartered in 1932 or 34 off the top of my head, but as a production credit. And then we've been through several different mergers, and they had merged just before I got there to expand and diversify.
What caused the big explosion in growth? Was it the merger, about the time you got there?
Adding the real estate portion. Most farm credits in Texas formed an ACA and started doing both production and real estate. And of course, in Central Texas, real estate demand, that's been a thriving piece of the market for a long time. I mean, we've had a lot of urban sprawl and people wanting to either have recreational places or raise their family out in the country. So that allowed and positioned us to grow. And then like all things, when you merge and get a little bigger, our company got stronger, and that allows you to leverage your growth opportunities even more and just capitalize on that growth. And we've been blessed, great management that's kept it rolling that entire time.
When you started, were you surprised at just seeing like the loans, the people that came and applied for loans and the, like that whole side of things? Were there any surprises? And then like, did you have any control on, I'm going to take a risk on this one, or was that kind of above you?
No, we actually did. Getting in banking, and I love using the examples, but you can't judge a book by its cover. And I got to look under the cover. And the guy that drives up in a flatbed with a feeder on it and walks in, kicks the mud off his boots on the way in, most likely a multimillionaire. He has no reason to present any other outward appearance. I mean, he's doing what he wants to do every day. And so, you really started finding out, which I talk about it in my ag class. I mean, if you think any of these farmer ranchers or dairymen around are a lower class citizen than someone in downtown Dallas or somewhere else, think again. I mean, our largest productive asset's real estate. So look at someone that owns 1,000, 2,000 acres and think about the financial wealth that they've accumulated. Mm-hmm. And so that was getting to be on that side of it and see that and realize it. I naturally am very drawn to the inner workings. Like, okay, why is one deal thriving, but another deal's really not? And you start really looking at the numbers and trying to see what the differences is. And sometimes you can find them, and sometimes you can't. Sometimes it's an art. I mean, a lot of agriculture is an art, but so that was learning that and being on that side of it was something different. The financial conversations you have with people are also different. You have some tough conversations. Those are terrifying the first few times you're telling someone no or having a conversation, but then you learn how to be consultative with that too, and talk about what would grow their business to a point that I would love to look at it again. Because you also got to keep in mind that maybe a door's closed today, but that door might be open 5 years from now. And, I always want a long-term relationship. And so those opportunities, you don't know when they're coming about. So you don't burn a bridge, and you realize that, hey, a lot of these young people, success may be right around the corner, and if I can do anything today to be consultative or add to that, maybe I'm not exactly providing what they thought they were coming here for, but if I can be any piece of that or stay connective and, hey, I'm always here for a phone call, reach out to me, then maybe I've cracked that door open down the road. And getting to be involved in that and start seeing how that could feed my career and what presence I could have or affiliation I could have with someone that was growing. I kind of had to learn that too while you're doing it. You don't come in with that background. Those are conversations that you have in person, and you start to see how they feel and see how people react. And then you change your reactions and your responses, and then you kind of grow, and you become more professional at that as well, and see how everything ties together.
Yeah. Was it like a big change in knowing, not really coming from a production background, and then you got all this finance knowledge, and then getting into that, and then getting involved with these old ranchers and cowboys or farmers or whatever? Was that like a big learning curve there?
To some extent. I had naturally, I hauled hay. Every side job I did all through high school was somehow ag related. So I had got to really meet some of the old legends, around the area and be around them. So I had a little of that background, even though it wasn't, really from me personally. But connecting those dots and then getting to hear them talk about business. Because, again, my previous affiliation was I got to meet the guy and see how hard he was working in his operation. But at the end of the day, I was just moving 500 square bales of hay. But when you start talking about business, and you figure out it's no accident they're where they're at, and getting to hear that mindset was very interesting. Mm-hmm. And then, I started learning things. I had an interest in the production side of it, and I was trying to do what I could do to be affiliated with it. But then when you're around some folks, you couldn't ask for better mentors. Some of my clients have been my best phone call when I don't know what to do with a sick yearling. There's several of them that'll tell you they've got a phone call from me. But you just learn from that knowledge, and definitely. And two, I even what I thought I knew about how hard they work, I have the utmost respect for it. A large portion of my portfolio now is dairy clients, 365 days a year, 4 a.m. I don't envy their schedule. They absolutely put their life into it. You do it because you love it, and you start finding, there's no 8 to 5 in agriculture at all. And that only made me respect them more, and to some extent be envious of their life. I'm blessed to have more of an 8 to 5 and all of that too. But just to get really as familiar with exactly how what work they're putting in, how hard they're working, it changed my overall thought on things a little bit.
Mm-hmm. Yeah, there's a lot of similarities I see in whether I'm talking to a business owner or a rancher. It's you never turn it off. It's,
right.
You're every day, all day and night. I mean, that's how I am, and that's how a lot of people I talk to. And the same deal on the ranching side. Like, you can't turn it off. Like, you gotta be taking care of it, thinking about it all the time.
No way. And I approached my banking relationship with them that way as well. I mean, when something goes wrong at a dairy at 4 a.m. on a Saturday, I mean, absolutely text me. There's some business things I can't make it happen on a Saturday, but let's have the conversation for Monday. I mean, my hours don't look like anything like a city commercial banker either, but that's part of it. And I love that part of it. I mean, that relationship, I hope, is valuable for both of us, that we can text and call well outside of work hours. I mean, I know what they're doing occurs outside of work hours, and some of the things on a dairy are at their calmest in the middle of the day, and everything else is happening overnight and the rest of the time. So, I think there's a lot of affiliation. If you're paralleling it or involved in it in one way or another, there's a lot of that. The lines start getting blurred as to, everybody starts assimilating the same schedule. And I love it. I wouldn't do it any different.
Yeah. How did you start advancing in your career as a lender there?
Waited them out. No, just put the time in. I mean, everybody has a drive and you have big dreams and you think you know where you want to go, and you really don't until you're doing it. But you just network, build your network, and building your network builds your loan growth. And one thing stair steps and stacks on another. And then through that, you have an opportunity to grow up through positions and do different things in the company. And, for me, it's just been the drive. We set goals every year on where do we want our loan growth to be, and it's a joke that I've told every one of my superiors. But what do you have in mind for this year? I'm gonna make all of them. I don't have a number goal. I'm gonna make all of them. Some years, all of them is a lot more attractive than other years, But I'm after all the business I can get, and you keep that mentality, and then you stack up some volume, and you work for folks that support you and support your growth in a company, and create opportunities to grow. And 25 years later, you find yourself in some different spots.
Did you start seeing like a certain niche? I know, like you talked about, you got a lot of dairy business now. Like, did you start going that direction, or are you still interested in just the whole aspect of it?
No,
or like, I guess when you were starting out, did you start finding a niche in there? Last month we gave away a turtle box, and this month we're giving away a pair of Fenoglio boots. The winner will be able to go pick up a new pair of Fenoglios in store or online. So fill out the form below for a chance to win a new pair of Fenoglio boots.
Not really. I've always been interested in all of it, and the dairy side of things came about a little later, just from transitions we had internally. I had a little bit more of a personal background through beef cattle, and so I handled a lot of that portfolio. The real estate side in our area, I mean, I had some interest in the real estate market and what's going on. And, and there's something neat about knowing you finance some of the coolest places in your counties. So I always, those sides to me came kind of naturally, and I was interested in anything that touched those. Later in my career, through some transitions we had, I stepped in and was actually just helping service the dairy portfolio. And then again, the side of me that loves the data and loves the numbers, it was something new. And it came at a really good time where every now and then you need something new to drive you and perk you up a little bit. And so getting to get involved in those, and I just built some quick, good relationships with clients. And then what turned into helping service a portfolio had almost doubled the portfolio in a couple of years. I brought in some help with me to service that portfolio, and it just became a part of it. But I'm still, where I'm at now on the agribusiness side, I handle some large yearling feeder deals, feed mills, more the larger side, traditional agribusiness. And so I still touch it all. I'm still open to looking at anything. And my expertise now has somewhat become into our larger credits. And that's just a time, and you trip across, and you manage and handle a larger loan. And there's some, intricacies that come with that when debt's starting to be shared with 2 or 3 other banks, that some experience background brings to it. And so now my portfolio is mostly isolated to those larger credits. And that allows me to focus a little more time in higher management on a smaller number of clients. But you've got to be there to service them quick. I mean, you've got a lot of dollars on the line. So it's extremely beneficial for us, but we're a huge part of their operation as well. So that's kind of been a transition intended to allow me to focus where maybe my expertise had built themselves to. But it's certainly not just dairy. It's still scattered across dairy, beef cattle, and some large real estate and feed mills.
Yeah. Kind of starting out and through your career in that, like what were you doing to build that book? And like everybody says network, but like what tactically was.
But how do you network?
Yeah.
I didn't have social media or podcasts. So I'm old enough to not have had that.
I think that is the most important thing is it's all about who you know, especially in a sales situation. So like, but like, I want to know, like, I'm not like I'm more introverted. So like, what is like, are you going to events? Are y'all sponsoring things? Are you just calling people? Like what did it look like?
Well, early in my career, you're taking the shotgun approach. Like I was trying to do it all. Like go to every event, go to everything, every chamber banquet. And then over time you start looking, okay, where am I seeing results? Where am I seeing benefit? And for me, it relatively quickly, I'm a believer in the warm lead. And I mean, you talked a little before the podcast started, just kind of naturally got off on that. I mean, there's a place for cold calling, and there's certain products you sell, certain things that you sell that cold calling may have as high a hit percentage as not. But when you're talking about selling financial products and also trying to establish a relationship, I'm not looking for a short-term relationship. I mean, the highest profit for Ag Texas and the most future loan growth for me comes from me and you doing business for the next 20 years. And I've got a number of relationships that are 25 years old. Well, when I started looking, okay, where do those come from? And to me, I always had a connection or a tie. Well, once let's say the first loan, I accidentally made a loan to someone that's connected, just ask them, who should I talk to next? And so I started letting that spider web of warm handoffs and warm referrals grow. And then, then 6 degrees of separation starts taking effect. And this guy's connected to this guy. Well, now the two are connected together. And that's how I've really focused my strategy towards sales. I'm selling a product that's so unique. I'm looking for an individual that's so unique. Do a lot of our real estate clients originate from the Metroplex? They do. But going to downtown on Sundance Square, there's in the teens of CPA firms within a few block radius. There's 5 to 10 banks within a few block radius. There's X number of insurance agents. All of those can be great referral sources, but how many of them actually do business with somebody that is looking for a 1,000-acre recreational ranch or that runs yearlings full-time for a living? You just really have to, you can waste a lot of time on the cold call and non-targeted approach. And so I just started looking at where did my hit percentage come from. And it always came from when you referred me to somebody. And then I would ask you for business. Mm-hmm. And it was always valuable enough. If I said, hey, Crockett, who do you think I should talk to? And you threw out a State Farm agent, there's a reason that number, I'm on, let's go and let's see where it came from. And that's worked. I don't know if it's luck or staying with it, but so for me, it's always been the warm lead. I put a lot of research in the background. I've got a lot of type A personality, but at the same time, I don't know that my personality loves just a one-off cold call. I want to have something we can connect over. Mm-hmm. And so nowadays I'll have Facebook stalked you. I'll know kind of a little about what you do on your weekends. I'll know who you're affiliated with. And I've kind of got enough life experience that there's something I can probably talk to you about. I find a picture of you playing the guitar. We're going to talk about guitars. But then you start to build, nobody cares what you know until they know you care. That's straight from a really old sales book that I read. And I think there's a lot of truth in that. I mean, if I'm just going to hit you and compete over interest rate, I'm going to lose you as fast as I got to you. But if me and you can hit it off and have a conversation, by the time we talk about rate, there's a little more there. Maybe I've been consultative. Maybe at least you've just affiliated with someone you've got some common interest with. I mean, a banking relationship, you're fixing to borrow several $100,000 to $1 million. There has to be some comfort in that. There's a little nervousness on a person's side when they're fixing to sign a note that big. And so if you've got some common interest that you're shared and you can hit off a relationship, I think you start leveraging that to do business. And I think, to me, it's always felt like a win-win from that point into the future.
Yeah. You want it to be a win-win for everybody.
Absolutely.
And to kind of go into that, like that advice you're giving on sales and stuff like that. So what does somebody got to do if they wanted to be in the same career as you, I guess?
Careers in farm credit.
Ag lender, yeah.
So, most all of us come from a background in finance, ag business, ag eco, economics, accounting. So you've kind of got some natural collegiate degree paths that lend themselves toward that. Farm credit now has
does it have to be a certain degree or anything like that?
It doesn't have to be. We've got a little of everybody involved throughout the association, but those are kind of some natural ones that lead toward that. Because you pick up some background in affiliation and accounting and tax return spreads and that type of thing. But it doesn't have to be isolated to that. Farm credit now has a world of opportunities. When I started, the number of employees in farm credit was lower. So your percentage of getting in was just harder statistically. But now there's a lot of different diversified and segmented roles within farm credit. Normally we bring lenders in now somewhere on the credit side. So you can pick up the analysis side of it to get the chance to look under the hood. Like we talked about, I got to do it live and in person and grow from there, but get a chance to look at a true producer's financials under the hood. Start looking at what it looks like, get comfortable with that before you're having to have conversations about it. Because the two are really separate. You can be really, really good at the relationship and conversation side, but if you can't explain the financials or you're getting nervous over doing that, you're not ready yet to have that conversation. So we try to start them in and bring their analytical background up, bring their knowledge of the industry from the financial side up, and then transition them into relationship management and working with a customer. But we've also got appraisal staff now. We've got a large, robust credit staff that do all the behind the scenes work on helping us get things done. Our relationship admins, we can't live without them. They help us get a loan closed. So we diversified up those positions enough that there are a lot of service points to get into farm credit. And no matter where you're from, there's a farm credit that serves your area. There's 7 covering the state of Texas, 55 left in the United States. So if you're trying to go back to a certain area, there's a farm credit that covers it. If you're open to areas, you can certainly, find a variety of openings across different states. All of them have really good job role postings through their website, so you can start there. If you're a college student right now, internship programs are huge. They're somewhat limited in quantity, but we use the internship programs to give us an insight and hopefully identify next talent. But it's a great way for a young person too to expose themselves. What do I like about banking? What do I like about farm credit? You may come in there thinking you want to be a loan officer because you had me in class and saw that background to it, but you end up finding out that appraisal is really what interests you. The data behind the real estate to get out on all of that real estate all the time. So there's a lot of points into it, and be open-minded. And I talk to a lot of college kids that are looking at that next step for a career. And if you're dead set on an extremely precise thing, that's hard to find. You can get lucky and find it, but it's hard to find. But if you'll open your mind and start looking at parallel paths into it, it may not look like what you thought the day you started it, but those are still paths within. And, farm credit, rural banking, all of those can be paths that kind of transition you back into this. Nationwide, some of the rural, small regional banks are as active in agriculture as farm credit is. Mm-hmm. So, there's multiple paths to still get to deal with ag producers daily. And if you're from a small rural community, you've probably got one of those banks there. So, leverage that background, leverage your local knowledge and get in on that floor. So there's a lot of ways into the business. Just got to be open-minded and got to be open to those parallel paths going in.
Yeah. What do you think the biggest differences are between conventional banking and being in the farm credit? Superior Steel Sales is based out of Carthage, Missouri, but they ship pipe and fencing supplies and livestock equipment across the U.S. Like many of the businesses we talk about on here, the owner, Matt Bell, started out specializing in building pipe fence and livestock pens and saw an opportunity to supply ranchers and contractors all across the country with quality livestock equipment, fencing, and corral supplies. They carry a full line of pipe fence, corral materials, as well as their own line of livestock equipment. Superior Standard. No matter where you are in the country, if you're in the ranching and livestock business, you need to check them out. They probably have something for your operation and a growing dealer network across the country. And of course, like most of the companies I tell you all about, you're going to be dealing with great people that'll take great care of you. Check out their website at superiorsteelsales.com or their Facebook, Superior Steel Sales.
You know, I've never worked from on the commercial banking side. So, but it's what you're focusing the bulk of your day on. You know, and I think anytime I talk about relationships with someone, and I've mentioned that to me, lending's a relationship. But even if you're talking about a relationship with your significant other, find someone that shares your passion. You've got to align yourself with someone that matches your energy and shares your passion. Well, if your passion is agriculture, moving toward a bank that's primarily heavy, whether it be commercial or farm credit, in agriculture, you're aligning yourself with the best fit. And same thing if you're looking for a banking relationship, you're looking for funding. You know, do you want to go to a bank that maybe gets one ag app every 2-3 months? Or do you want to go somewhere where the lender has as much passion about agriculture as you have? And to me, I think if you match that energy and match that passion, you're going to have the most productive long-term relationship for you as a borrower as well. I think on the commercial bank side, they're so diversified. You know, I mean, there's so many income streams that are huge and do a tremendous job for them. But I mean, interim construction, they get to flip that money, you know, a couple of times a year getting houses built. Automotive and vehicle loans are huge. But, you know, you've got to work through that every day to have that little bit of an ag portfolio if you're with some of the big conglomerate commercial banks. And you know, and I'm making some generalized statements, but there's commercial banks that have huge ag portfolios. I mean, that aren't even regional too. So there's ways to affiliate toward that. But I think in general, what I've always felt like is my portfolio was going to be so diversified in commercial banking that I wasn't going to get that tie to where I wanted to dedicate my interest in my future, you know, in my efforts. So farm credit, ag lending, that's allowed me to do that.
What are some opportunities for somebody that wants capital? That seems to be like the first thing you think of is like, oh, I don't have any money, so it's holding me back from doing X, Y, Z.
Right.
Whether it's, you know, buying something material, a house or car or piece of equipment, or land, or starting a ranching operation, you're getting in the yearling business, a cow loan, something like that. What are some opportunities that like somebody getting started has?
Absolutely. So there's a lot of money out there. Doesn't feel like that when you need money, but there's a lot of opportunities and a lot of sources of capital out there. You know, and a lot of, you know, I'll throw this up front because the background you put in from your 18 to your early 20s is setting that path, you know, building a good credit score. There's some things you can do early that serve you, even though you don't know what you're doing. Mind your business back then. But then when you start looking at entrepreneurial ventures, you're coming in with some reference to your credit score that's good. But I mean, there's a lot of program specific. I mean, Farm Credit's got federal initiatives towards young, beginning, and small borrowers. So we've got some lighter standards. We kind of work with some young people to try to help them get that fit in the door. You know, agriculture is the barriers to entry are high. We're a highly asset heavy industry. Number one asset being real estate. I mean, it just doesn't come for cheap anymore, and it's getting harder and harder to lease. Nowadays, a yearling is about like owning an ounce of gold. So, I mean, you know, the barriers to entry are high. But, you know, USDA and Farm Service Agency, they've got multiple direct lending programs. They've got programs that angle themselves to SDA, socially disadvantaged Americans, that fall. There's a lot of categories that can hit into that, from socioeconomic to ethnicity. But those are things that you may have in your background to leverage to get your door into a direct loan. They've got direct lending at extremely low rates. They've got some loan limits involved. I think it's around $1.2 million on some of the farm operating. loans and maybe a little lower on operating. But they've got some federal initiative to help put money out into agriculture to folks that cannot obtain that credit other conventional ways. And I think as we've become a little more urbanized, USDA and Farm Service Agency may not be commonly known to a 23, 24-year-old outsourcing capital. But it's a very good place to start. Farm credit's a great place to start. Your local regional commercial bank, and lay everything out. Have your plan put together, and it doesn't need to be a 3-ring binder that's 2 inches thick, but know what you're going to do and lay that out. Share your plan, share your passion. The more you help a lender understand where you see your path, you're starting to check off things that to us could be risk. I mean, every loan we make, we're managing risk for a known return through our interest rate. But if we have time and other things and other unknowns that are weighing into risk, well, if we can start saying, okay, I see where he's going. I understand that, we've got a plan here. All right, those peel down. They're no longer risk to me. Let's just deal with the financial factors. And yeah, when you're young, it's hard to step out and obtain that next level of leverage. You've kind of got to be willing to stair step your way in. And I know sometimes I think that's hard when you're in the planning phase or the idea phase of an entrepreneurial venture. Everybody tends to swing for the fences, right? When they've got a big idea. It's called a dream for a reason, but sometimes you scale back and okay, all right, truckload lot right now, it's a fairly big step, but I think there is an opportunity to put together a set of 10 black, white face heifers, get them bred up, get them flipped, turn 10 into 15, turn 15 into 30. There's ways to do that. And if you'll come in and visit with your bank or your lending source and say, hey, here's where I'm wanting to go. I've got a lease. I've got my grandparents' place, or I own a place. Right now, I don't think I'm there. I'd like to look at where I could be. But one of my alternative plans is I'm going to start with A. And I want to build from A to B to C. And when you see something laid out that way, there's a lot of opportunities to obtain capital. But I think a lot of people get backed into a corner before they've seen those stair-step paths to do it. If you just go into a bank and say, hey, I found a piece of real estate that I think can make me some money. Can I borrow $1 million? You better have your affairs in order to borrow $1 million. But if you're going in with a sight of how to get from point A to point Z, then I think anything's possible. And seek knowledge. Look at the producers around you. Go into that bank. Don't be worried about the conversation you're fixing to have, and ask questions and learn something. I would always say if you're a young person going in and you're getting turned down, it's kind of the worst outcome of the appointment. Don't accept just no for the answer. Ask why. We've got very set out regulations and standards that we work within our policy. And I've always chose to be that way. I'm going to be consultative and tell you that right now your current ratio is a little out. But if you've stacked up $2,000 more in cash, we'll have that ratio fixed. And every lender that you visit with knows those parameters and can work through it. And I think sometimes, the gravity of that situation, well, I came in, I tried to do this, and I got told no. You don't always ask a lot of questions, but hey, that appointment is an opportunity to learn too, for both of you. And when you engage that lender in that conversation, you're going to watch them start seeing like, hey, they really want to know where this came from. They want to know how to get there. And I've had opportunity, I've passed on a loan more than once, and 3 months later they come back in, they've like, I fixed this, and this, let's talk. And I think that's a win. Mm-hmm. That's a win for both. Like it felt good to me to see a young person succeed and go and hit a home run and come back to me and be like, here we are. You've had some people on your show that I started with when they were extremely small, and I've watched them just hit home run after home run, and like I love that. There's nothing I'd like to see more.
Yeah. Do you on the lender side, like, do you see, like, if somebody checked all the parameters, they had the credit score, the cash, or the assets, or whatever they need to put up, the collateral, but what if their business plan was not wrong? Is that like up to your judgment, or do y'all have parameters? Or if you didn't hear Ben Hell's story on episode 69, you need to check it out. He's been earning trust in the cattle industry one handshake at a time since 1995 at Western Livestock. Western Livestock is proud to be family owned and operated now with 5 locations: Oklahoma City, Woodward, Comanche, and Waurika, Oklahoma, and also Knoxville, Iowa. They're proud to do business the Western way with honesty, integrity, and a handshake that still means something. You can join them ringside or stream their sales from wherever you are. Western Livestock, where a handshake is their word, cattle are money, and timing is everything. If you're looking to buy or sell, contact Ben Hale at 940-631-BEEF. That's 940-631-2333. Check them out on Facebook or westernlivestock.com.
Well, it can be. I mean, we've got enough industry knowledge, but we also have enough CPA prepared financials and data on other folks in the industry to know if your business plan model's out of line. Back in the day when I talked to a lot of young cow-calf borrowers, everybody came in with 100% calf crop. And you know how difficult that is. I mean, maybe on a one-off, if you buy nothing but bred cows, you can put 100 of them on the ground.
Yeah.
But
that's probably not even going to happen.
Yeah, right. And so when you get that business plan, I mean, I'm going to go in and I'm going to talk to you about it and say, hey, I've made an adjustment and I've backed this down to an 80 or a 90%, depending on what I knew you were buying. But I want realistic numbers, So yeah, we've got some latitude in there, and lending is a really unique situation to be in. There's a responsibility you bear on the lending side, and I spend as much free time as I can in the gym. That's just one of my other passions. And if you're lifting weights, there's a concept of progressive overload, and as long as you're incrementally overloading yourself, you're going to have growth. On the lending side, as long as you're incrementally leveraging yourself, you can have profit and growth. We're in an industry that has a lot of risk in it. But just like in the gym, I can overload you to where you fail. And I don't care how big of an old boy you are. I mean, I can overload you to where you're going to fail. I can give you enough money to make you broke to get in a hole that you can't get out of too. So if that business plan or that model has some holes in it, we need to talk about it and let's start to get them right. And maybe you hear something you didn't think of, and we can, like we do some peer comparison data to where I'll have blind comparisons and say, hey, right here's the actual feed expense on 7 other dairies. But what we've got penciled in here, you're $3 a hundredweight under them. Like, let's look at where did you get that number? So yeah, there's a lot we look through in that because I mean, certainly, one of the things I talk about the most in my class, one of my favorite chapters is risk. If you're making widgets, you're almost on a linear production curve. Well, by the nature of biology and agriculture, we're dealing with dimensional marginal returns. You can only feed a steer so hard. You can only fertilize so much before you start having decreased results and certainly decreased margins. Well, with that, I mean, there's just so much like to look through there and talk around and let's get our model right and let's look at it. I mean, and we look hard at that, we want to help you maximize your business, but we want to know that we're making a productive investment in your future, and we want it to be a long-time relationship too. So, yeah, we do have a lot of talk around business plans. And I think, the folks I'm sitting to across the desk, one thing I always remember is they're very good at a lot of things that I'm not. I sit and look at financials and business plans every day to some extent. So sometimes the business plan's off just by lack of experience in it. So, hey, let's coach them up. Let's look through this. Let's go through it together. And usually you get it worked around. I've had very few business plans that I've ever looked at and been like, oh, I don't want to be any part of that. I mean, you just don't. I mean, there's things you correct and make changes, but let's get this to something that's viable. Let's make it look where the numbers look more realistic. And here's where I think, where did you get that from? Let's talk through it. And that way we're both making a known business step that's logical. We've got, it's one thing talking about variable cost. And if I up my production from 1,000 widgets to 2,000 widgets and my profit's $2 a widget, I've got 2,000 more. I mean, that's simple math. But where we're at over here, we're also depending on weather. We're also dependent on a living animal. We're also managing health on that living animal the whole way. We're dealing with the commodity market, the vehicle market. Their pricing changes are slow to react. I mean, during this podcast, the commodity boards moved several times, and everything that we deal with in agriculture is now priced for us on the futures board. And so all those risks bring something in there that you need a solid plan. And there's expertise out there, seek that knowledge too to help put that plan together. I mean, I've never not met with someone or went to lunch that just wanted to pick my brain and talk about it.
I think a big thing for me, I was lucky growing up. We had a really good relationship with just our local banker. But then when I wanted to get had opportunity to lease a place and buy some cows and stuff, I was looking at getting a loan somewhere else, and I ended up going through FSA. And it was a long process, but it was probably good because it did make me sit down and make a plan, write out a plan, do a financial statement of assets, liabilities, and all that stuff. How would you direct somebody like that's super green like that? Like, I didn't have a clue. I just thought, give me some money, I'm going to go buy some cows, I'm going to turn them out. But learning to do a financial statement, ask the difference in assets and liabilities, and writing out that business plan, making a business plan, and all that stuff.
Well, there's enough resources out there now online that you can kind of get someone in touch with them pretty easy. But we've also got blank forms that we'll share. So if someone green approaches me, like, hey, I'll share you some financial statement forms. And it's pretty simple to walk someone down through, okay, here's what should go here, and let's talk about what a long-term asset and a short-term asset is. You can kind of handle that consultatively through them. I mean, that's really the main thing. If I run into someone green, I just want to give them the tools, because having the Excel spreadsheet to begin putting your assets together, once you go to page 2 and 3 of the financial statement, it's going to walk you through them. It's going to prompt you to enter them. And so, just get the tools in their hand and help them get through that. The business plan, it's pretty easy for me to tell someone what we want to see. How much capital are you going to need? I like to see expenses broke out monthly, because we've got to ride out some cycles. We tend to feed things for a long time before we get them sold. So let's look at expense needs until we have a revenue source come in. But there's a ton of tools. I mean, directing someone to a consultant, you probably don't need to go to that level. I mean, there's some enterprises that you do if you're going to swing big enough, but at the same time, I can connect someone with some simple Excel stuff and some simple resources online, some stuff from my class background, get it in their hands to at least get you through that phase.
Yeah. I'm trying to think, I think you told me the other day, but like the young, beginning, and small, what are the parameters on that?
So young is under 35. Beginning is less than 10 years in enterprise, and small is under 250,000 in gross sales. So that's a pretty big loop. And it's really unique because you can be either one of those categories. You can be my age, but never have bought an ag place. And now you're to the point where you're wanting to buy a recreational or hobby, a ranch that supplements what you do as your primary source of income. Well, you're beginning. You haven't been in that enterprise for more than 10 years. So those categories fit. It always starts out, we say young, beginning, and small. And I think you automatically think like helping a young person get in. It's really helping a new person get into agriculture. And that's the same with FSA too. I mean, most of their programs are geared toward, it's really not age, it's more time in agriculture, helping people get started. I mean, our federal government knows that we've got a necessity to feed and clothe the world. I mean, food security is a huge deal. Look at some of the other countries we're tussling with right now. They can't feed themselves. So our federal government respects that, and they've got things there. But all of those categories are things that Farm Credit and the FSA incent, and through different programs and different standards and different things to look at. Like, hey, we might be willing to go with a little longer amortization to help this fit, because there are things in a life cycle where young really does come into play. It takes time to build assets. Not for all of us, but for most of us, it takes time to build assets. So when you look at someone that's been out of college 4 years and maybe they have a great career and they're super conservative, but they've only built so much, and so everything else they got spot on. I mean, they're doing a tremendous job. They've got great income. They've got a great plan. and you can work around some of that stuff. I mean, some of that is tied to just life cycle and your business or your personal cycle to get there. But the rest of the initiatives are there to help small and emerging agricultural operations.
And in those, do y'all look at credit score? Like if somebody doesn't have a credit score or like no credit, or somebody already has messed their credit up or something, is that still a huge factor?
Credit score is part of everything. And we always look at it, but when you look at someone, and there's a variety of things. I mean, there's medical collections and things. There's a story to everything, right? And we do have enough leeway to like, hey, let's look at this. And all right, something's up here. Credit score's low, or they don't have a credit score yet. Let's ask why. Well, we've got other ways to lean and look more toward all the other financial metrics to work around that to some extent. If there's the right kind of negative things on your credit, well, the risk inherently may look a little too risky to get involved with. And, but we can, I'm going to tell you about how to fix that up too. Mm-hmm. Like, hey, there's ways to get some of that off. I mean, we've all made bad decisions in the past. I might make a bad decision before today's over with. You never know. But, I mean, credit scores always enter in and are part of everything, but we always weigh that out. I mean, we're fortunate. You deal with some of the stuff on more the traditional mortgage side, and you've got a lot of hard stops. But when you get through and you're dealing with a normal commercial banker or a farm credit ag lender, it's the whole piece of the pie. And maybe one thing doesn't fit the box, but when the other 3 or 4 do, then hey, like there's some ways to move on and work around this.
Yeah. Is there, so like I'll listen to like real estate people a lot, and they talk about when you get into commercial real estate, like it personally, it really doesn't matter as much as the deal. If the deal's going to make money, they base whether they're going to loan off of that. Do y'all see that a little bit? Like this is a really good business plan, but the person doesn't have the history or the credit or the income or whatever, we could still do something here?
Yeah, absolutely. We look a lot of that. I mean, in some of, even expansion projects for existing customers. I mean, one of the things we do look at is, okay, what's your past performance or knowledge in that industry been? If I can see that you've had a successful, clear pass in that, and I look at your business plan, yeah, I mean, that projected income coming from this is going to carry a lot of weight because, I've already got signs and you've proven that you can do that. I mean, if you're brand new coming from a background that has no exposure to it, you've got to inherently, because of the risk in agriculture, you've got to look at that a little more conservatively. Does this plan make sense? Like we talked about earlier, and overall, where the rest of the financial metrics, it starts becoming a little bit bigger picture. But certainly that plan and what's the income potential from it. Now, some of these large real estate purchases, the actual known easy go-to hunting lease income, grass lease income, well, they're not going to begin to service the payment, what the real estate has now. So you start tying in outside income and other things you've done. Not that the income coming from that next purchase doesn't add to that pie. So there's just a lot. It's a collective story all the time. Yeah. But we certainly do. I mean, any of our, dairy and yearling expansion projects, when they're going to the next level, absolutely, we're putting weight on that income that they're going to get from growing their operation. And
so I want to touch base on that too. We talked a lot about, and I think a lot of my audience is getting started or just got started and or wants to get started. But what about somebody that's already going, not going to qualify for that young beginning small loan?
Yep.
Why would they probably already have a relationship somewhere else. Like, why would they come from another bank to you? I think that conversation is pretty easy if you're involved in a big corporate bank or something. I could see then they have an ag loan with them, why they would come to you. But even talk a little bit on that. And then also, like, why would somebody come from another ag bank to your ag bank?
Well, you hope that, the consultative piece we bring and the industry expertise. We're significantly more active in the dairy industry than a lot of other commercial banks and even some other farm credits are. And you hope that they say, hey, I'm seeing a home over there that may fit my business model or my business plan more. Affiliating a relationship to where maybe I can bring some value to that another lender can't. We try to be extremely high service in farm credit. And I love that about us because I think service is going to the wayside. Any other place you call, you're going to get the press 1, press 2. You're going to go through all that. You're going to call me and get a live person. You're going to call our front desk and get my cell phone number. And to me, Farm Credit excels in that old school customer service. But I think that's important in agriculture because our customers they don't have the time to sit there and go through a phone menu to get to it. And I think a lot of that, I mean, you start, hey, we do business like you do business. You've got a great banking relationship now. And I mean, I appreciate that. And hey, there's times I've told people like, you're in a good place. Stay, you're in a good home. But I spend my day only looking at operations like you've got. I've got an entire credit team that only looks at credits like you've got. We finance 80% of the industry you're in our area. And you hope that affiliation starts drawing some interest in us. The farm credit system as a whole, nationwide, we're member owned. So we're a co-op. And what's unique about that is we pay a patronage dividend every year. Your commercial bank's not going to mail you a check back. We're going to give over half of our earnings back every year, back to our borrowers. So when you start netting a fairly significant percentage off your interest rate, that's fairly attractive too. So, we pick up some business like that as someone starts to grow. Our patronage dividend starts having more gravity. Hey, I could be getting a very significant check back. They talk to their peers and their peers just got their check in March from us. And that itself starts becoming attractive. But I think a lot of the times it's just affiliation with industry expertise. I mean, in other banks, naturally, when you have a change in lender, whether it be through attrition, retirement, or a change in lender because of promotion or something else, that always opens a door. You never know if that relationship continues at the same level with the next person. So that's something that gets people looking. A juggled touch, something might have accidentally gone wrong. I crack the door open, that gets people looking. And those are all things that, I get excited about every day. I mean, we need to be perfect all the time. That mistakes happen, but that should be the goal every day because, I mean, there's just a lot. Everything in agriculture happens fast, and when an opportunity comes up, they don't have time for me to think about it for 6 months. And so if I can react and I can serve them, and I can strive for perfection and be a knowledgeable industry leader for them, hopefully I can win your business and keep it.
And what about the bad side? So we, like you said, there's ups and downs in the industry. And I know like a big one you went through was like COVID and then also like that plant burning down in the cattle market. I don't know if you were still involved in all those loans, but like stuff like that, how does that affect? Are y'all having to have a lot of talks with your people? Or I've got a huge giveaway going on right now for business owners. I've got a brand new 24-foot flatbed trailer from DX Trailer Sales, and I'm going to give it away to a new credit card processing account. You've heard me talk a lot about it before, so not only will you get the savings, the service, and the upgraded equipment that we offer, but now you're going to be entered to win this brand new flatbed trailer to help you in your business, or if you just want to haul around your personal toys on it. So if you're a business owner that's already taking credit and debit cards for payments, click the link below and let's see what we can do and get you entered to win this new trailer.
So the reality is that's part of agriculture. There's always something. I mean, I've been in beef cattle since we went through the mad cow deal the first time. The second little scare, been there for some of the plant shutdowns, been there for packers pushing back, been there for Canadian shutdown. Now we're dealing with screwworm and the Mexican border shutdown. I mean, there's always something. We don't know what the next thing will be. We don't know what's going to move the border around if it's a tariff fight we've got going on. And that's just a known and understood. I think that's known for your side. I mean, you're no stranger to knowing the risk. You're out there doing it every day. Well, for us, banking it too, that's just part of it. And there are, if a bank's not heavily involved in agriculture, they might overreact to those situations. But yeah, we have a lot of conversations around it. When COVID broke out, I mean, some of them, like your distribution channels just shut off overnight for milk and beef. And so product wasn't moving. And then instantly you watch the board price respond to that. Nobody knew what the long term is going to be. And, and we looked at our portfolio and we had talks with our customers like, hey, let's brace ourselves. We don't know where this is going to go. We didn't overreact. We had tools in place. We deferred some principal payments so that they could hold liquidity in their operating loan. And, Farm Credit come out, we did a 6-month deferral up to 1 year. And that was a tool where, okay, we're not focusing on debt service. Just hold your equity and liquidity in your business and keep operating until we ride this cycle out, till we knew what kind of government programs and fundings were coming out. We've just got some tailored responses to that come from knowing that's all we finance. If we had a knee-jerk reaction every time we had a major slide in the boards or another plant fire happened or a plant shut down, we wouldn't be long-term in the business, and you just got to understand that every ag industry has a cycle. Those cycles are getting more and more complicated. Used to we talk 7 to 10 year beef cycles and we talk 3-year dairy cycles, and you could pull up 30-year averages and just watch them cute as could be. And now we're starting to have inter-year cycles of different things that none of us saw coming out of left field. When was the screwworm eradicated? In the 50s? That was not on my bingo board for 2025. It's coming up as a topic, and now it's a reality. We were already at 985 to 1050 beef cross day olds. You take the screwworm deal in, we jumped to 1150 that same week. In the sale barns, we probably picked up 20 cents right now. No one knows where it's going to go. I don't know how fast they'll get that straightened out. There's always something coming from left field. The key is communicate. And you started to say, hey, let's talk about some of the bad conversations. All of those weren't really bad conversations with my producers. They're just open conversations. Mm-hmm. I'm not over it. None of us, we all see what's going on. It's all right in front of us. Okay, so what's the next step? Those are just open communication. And, and I talk to all my producers enough that it's just clean, open lines like that. And as long as you're talking, we can all navigate this together. When things get weird in banking is when you shut down. If you're delinquent on a payment and you've not reached out or communicated, there's really nothing I can do. Process takes over at a certain time, So I always encourage everybody, bad situations happen to good people. I've used that comment my entire career. And from untimely death of a borrower to illness, to polio getting in a herd, I've had a variety of things that couldn't have happened to better people. Hey, it is what it is. Let's communicate. Let's talk about it. Let's figure out how to put our hat back on and go to the next step. That's just part of it. And you probably aren't cut out for agriculture if those conversations scare you. It's part of the business. So that's the way we react. And to me, I don't ever consider them bad. Are they fun conversations? No. Everybody would rather get a phone call when they just cleared 400 on a closeout, that's a much better phone call than losing 150. But at the same time, hey, it is what it is. You wouldn't be to this point where you're at if you didn't navigate previous things, because there's always something. So if you've been in the business for 10 years, you've already wrote out 2 or 3 things. So obviously, what you're doing on your end. We wouldn't be still loaning money 100 and something years later if we hadn't wrote out a few bad things. So it works itself out.
Yeah, that it's a good business plan. It's just the timing wasn't good, or this was a weird thing or something like that. Yeah,
and it doesn't mean, now more than ever, risk protection. Like I said, it's my favorite chapter, but there's so many risks. And used to, when I first started, which, 25 years in the spectrum of agriculture is really short. But when I first started, if you were good at the production side, you managed the health on a set of yearlings, bar a mad cow or something crazy, it took care of itself. Mm-hmm. You were able to roll them back. They close out, or you either sell them as feeders or they close out as fats. You made a known margin and you went on. Well, nowadays you can be one of the best production managers there is, but we're getting darts thrown at us from every other direction with tariffs and everything else, moving the boards around, and risk management's as important as ever. And we're going to have conversations around that. I hope that we share a mentality where just being wide open all the time isn't quite it, because, that can knock your legs out from under you in a heartbeat. But, found LRP, DRP on the dairy side, getting a good broker to manage some hedge and crush trades right now are really, really good opportunities. And, if you've put a safety net underneath you that keeps you in the black, well, hey, you're going to live to fight another day. I mean, we might not like the margin calls that have happened during that, and you may have wished for a better closeout, and you may have wished at the end, had I been open, I wouldn't have had those. Yeah, but you know what? We're still here to buy the next set of yearlings. So risk management's a huge part of it, and risk management's that's a part of it where you can deep dive as far as you want to. You know, I mean, there's whole college courses on just hedging and managing the stock market side of it. So find you a trusted professional to manage that piece of it for you. And we've got the same thing for pasture rainfall and multi-peril crop hail. We've got protection on the forage side too, which is important to beef and dairy industry. So there are things out there. There's tools to work with you in insurance, and people shy off of those premiums and knowing that they're paying for an LRP policy. But when you really look at for a known price, you deferred your risk off onto a third party. When you look at what insurance is doing for you, I think you can stomach those premiums a little better. You just got to acknowledge and build them in. They start becoming a piece of my business, but you sleep a little better at night.
Yeah. And are you, I mean, I guess like you were just saying, you're consulting people to build that in their operation, and it also protects you all.
Absolutely, yeah. And I mean, most of the time, the producers are way ahead of us on that. I mean, they've already, you know, now I don't think anyone's out there just riding for the brand every day with, you know, open on everything. I mean, everybody's pretty aware of that. But no, if we're going to look at a big increase and we're going to do something, we may say, hey, we would like to see you at least 50 to 80% hedged, just because we know there's a floor under it. So we have conversations around that. But young people, you know, especially as you're growing, it's one thing to be open when you just turned a set of 25 heifers. But when you ramp that up to a truckload to 2 to 3 truckloads and keep going up, all of a sudden then you probably want to have a little bit of a cushion underneath you. And yeah, we have conversations around that. And I've got referrals to affiliate them with good brokers in different areas that are affiliated with maybe a different primary area of expertise. We've got an insurance division that serves our customers in our area very well and knows the area specifically really well, and has really good touch to our clients and good service points. So yeah, we'll get you in connection with a professional to do that.
What would your advice be to somebody that's wanting to get started, farming or ranching, or maybe buying a farm or ranch?
Advice to get started? Go for it. I mean, that's you know, a friend of mine shared a podcast. We're always sharing stuff back and forth, but you know, most business plans fail in the planning phase. Most entrepreneurs never get out of that. Nate said that to me yesterday. So when he sees this, he'll get a kick out of that. But it's true. I mean, if you've got a vision and you've got a plan and you see something that works, go for it. And that first step has to be taken. You know, go to your local farm credit office, go to your local commercial bank. You know, you got to have your hat in your hand a little, because, you know, hey, this is where I'm at. This is what I think is going to work. I think I have an opportunity here. I think I have a place I can get bought cheap, whatever that situation may be. Put it out there in the world and get it on the table. And then let's talk about opportunities to seek financing for that, you know, and whatever it may be. I think a lot of people just fail to connect with the right professionals and resources, but they're out there. But you've got to go try to connect with them first. You know, just talking to your buddies about it isn't going to get you there. So make that first step and go for it. I mean, that's what the entrepreneurial spirit's all about.
Yeah. What would you say the most important skill for success and just in general would be?
Boy, that's a tough one. Man, there's so many. You know, I don't know that any one person. I've watched a lot of folks be successful, and I've watched people leverage a talent they have and be immensely successful. And I've watched someone else leverage a different talent. I think adaptability. When I think about someone that's been a long-term player in agriculture or a long-term entrepreneur that I know, doing tomorrow what you did today just because it's what you had done yesterday is probably not always the answer. Being able to adapt and respond and being able to make changes, getting out of your comfort zone is hard on everybody. If you're not living a little bit out of your comfort zone, you're probably not living your life to the fullest every day. And if you're just going to stay where you're at, there's no personal growth, but likewise, there's no business growth. And so being adaptable and being able to roll with the punches, because we never know what they're going to be. And specifically, we're talking about agriculture. There's a lot of things, and being able to change and say, hey, my opportunity that I did 2 weeks ago worked, but it's not here today. But where I see one is here, and adapt and move toward that. And when I first started in my career, I dealt with a lot of older producers that, they were going to plant wheat by September 15th. No way around it. They were going to plant a little too wet. They were going to plant a little too dry. And now,
it was the date, not the actual preparedness.
Yeah, I mean, why? Because that's when we do it. I mean, I remember asking some of them, and I mean, they know more about farming than they're going to forget more than I'll ever know, but they were just really adhered to that. And now it's not that way. I mean, drive around. You drive past a lot of wheat fields between here and Gatesville, and you're going to see stuff planted within 60 plus days of each other, and I mean, okay, yeah, when you're trying to get maximum gain out of it, the earlier you have it up, the better. But if it's not right, it's not right. Be able to adapt and go, hey, it's September 15th and I'm waiting on a rain, and then it's going to pay off at the end. You're going to put more pounds of gain later when you actually have a crop. And so to me, it's the adaptability that I think, if you forced me to get down to one word and I spent 5 minutes on it, but I think that's the difference. A lot of people don't live well out of their comfort zone, but if you can stay out of that, personal or professional, you can live your life to the fullest, and being adaptable is, to me, the only way you can do that.
Yeah, I think Alex Hermosi, I heard him talk about that type of thing, and he was talking, I don't remember exactly what he said, but it was talking about what's the end result that you want, and then just be flexible on how you get there.
Yeah.
And I was just talking about this the other day on on sheep and goats and stuff, and we were talking about that. They can be very profitable, but a lot of people are not willing to put up with them, or don't want to look at them, or don't like them, or whatever it is.
Yeah, because if you turn your back, they're flipped over.
Yeah.
Yeah.
But it's like when I got a place, it was like, now we got to pay for it. Like, I don't care if it's yearlings, I don't care if it's chickens, I don't care if it's cows, whatever it is. But I know running 10 cows on 100 acres is not going to come close to even putting a dent in the.
So you're willing to kid out goats now?
Yeah. So let's get out, and I did. I've talked about it before. I've done pretty much anything you can, and that may be like detrimental also, that I've not stuck with anything long enough to master it. But we've had sheep, we had goats. On the production side, I've also fed them there. Always, and still do this because I rope some too, like buying randy calves and kind of trying to upgrade them, calving out heifers, putting stuff together and trading it and selling it.
Yeah, but what you just said is, I don't stick with any one thing. You're sticking with diversification.
Yeah.
And that's a real thing. I mean, if all your eggs in one basket, that basket sells for what it sells for. And
I'm adaptable because it's like, I think I'm learning more and more all the time, of course, but it's like the sheep deal, we got in it and cash flowed, and then the market went up, and we were able to sell them for the whole thing for a big profit per head. So we did that, and then bought some back the other day, and just try to kind of play it a little bit and just adaptable. And the goats are good to keep around because we got some brush on one little part of the place, and they keep that cleaned up, and they're low maintenance if you can keep them in. So I don't know. I'm always looking for new ideas and stuff.
I know that's spot on. I mean, you just said exactly how I see it. I mean, that diversification and adaptability. I mean, you're open to wherever the income comes from, and tomorrow may look different than yesterday.
Yeah.
So.
Yeah. And that's what we were talking about the other day. I'm like, man, if a lot of these people, now when I go to a place and we're going to work cows or something, especially like if you go Gatesville and kind of west and like in the hill country area and all the oak, and then you got all the undergrowth under the oak. I'm like, man, if they would have, instead of putting 5-strand barbed wire up, if they would have put a net wire up, this would be awesome for goats.
Yeah, if they'd have put net wire up when net wire didn't cost what net wire does today.
Yeah, if you were just going to go do it now, I don't know that it makes sense. You're going to have to run a lot of goats for a period of time to pay for all the fencing, but there's other ways around it too.
Absolutely. Hot wire. I mean, hot wire and good dogs.
Yeah. You got to be adaptable.
Yeah, and that's it. I mean, it's hustle. I don't, adaptability and hustle go together. But I mean, if you ever had an entrepreneurial thought or spirit, you're a hustler. And I don't care. I watch it at the gym. I watch it with my kids. And me and my wife, we've taught them just like let's hustle, go get it. If you're trying to make something happen, you make it happen, right? Staying around talking about it's not going to make it happen, and you're going to get the results you put in, and that's it. Once you start hustling and your eyes are open, all of a sudden you capitalize on some opportunity.
Yeah. What's some good financial advice you've got?
Be respectful of it. Be respectful of leverage. You can read a lot of books and the theory of leverage, like when we talk about a lot of commercial and widget endeavors, the more I can lever my equity and borrow with debt, the faster I can grow. That has a place in something that has a linear model. When we talk specifically about agriculture, leverage can bury you. It takes a lot of equity in a yearling, or it takes a lot of equity in a dairy cow to ride those ups and downs in the cycle. So be respectful of that leverage, be mindful of it, because having that additional capital, additional liquidity, additional room in your financial statement allows you to take a loss year. I mean, you can't win every game. I don't care what business or sport we look at, you can't win every game. But if you've kept a buffer, a safety net, been mindful of that leverage, especially in agriculture, then you're set up to survive and go on the next day. And the people that I've watched really back themselves in a corner and fail have gotten a little too over leveraged. Agriculture is not forgiving if you're extremely heavy debt and too leveraged. I mean, if you're down in an equity position you can't get out of, when the market rolls against you, it rolls hard. I mean, we all know there's going to be a correction coming. It looks like we're set up, through maybe 2027 right now. But when that correction comes, it's going to hurt. And those that have kept that respect to liquidity and kept their leverage ratios a little lower, they're going to cuss about it, and it's going to be a rough few days, but they're going to be back in it. They're never going to be out of the market. But if you haven't had respect for that, so that's to me, I mean, financial advice, like there's so many pieces you can give, but you've just got to be respectful of debt. And I think we do a disservice to some extent at the high school level. I don't think kids come out understanding anything about credit at all. Whether managing a credit card, even knowing what a credit report is. In my college class, I go through a complete credit report. And that doesn't really, I don't know if that seems like it fits in a college class, but I know they've never seen it before. I mean, my class is a junior level class. They're 20, 21 years old. And all of them admit, some of them have seen their credit score through an app, when they got a credit card or whatever, but no one knows what's on that report. Well, it's extensive. There's a lot there. And I think we do a disservice to young people. I think education could be up, because I don't know that they come in with an understanding and a respect to what debt can get you in. Debt's a great tool, and debt will make for a really long, stressful day too, if it's misused.
Mm-hmm. And I just was listening to something the other day they were talking about debt and the complete disservice, the education, like nobody teaches you finance at all in your
whole
life.
It's not there
unless you go seek it out yourself. But I mean, you're going to learn at some point, whether it's good or bad.
The hard way. Yeah, the hard way or not. No, that's right. I mean, I had, I remember economics classes. We did some really cool stuff, ran some business models, but none of those ever talked about or addressed the debt part of it. We just talked about income, and, you just penciled down your little business plan you put together. And yeah, I think it's a total disservice. My wife's teaching a portion she teaches 6th, 7th, 8th graders, primarily science, but they've put a CTE unit in at their school, and financial matters is one of them. And so I took them the other day and we toured 2 dairies, and let's get these kids out and see what's going on in the real world. But a lot of the dairy tour, was there some cool things that a lot of those kids had never seen? Yeah. But a lot of it, I talked about what it cost. Here's this milk parlor. I know what this thing cost when it was built in 2021. And we started talking through dollars, how much flows through that dairy. And the kids' eyes were this big. And we talked about debt to go along with that. And then, they started asking me questions. about, well, do people ever go broke? I mean, junior high questions, but yeah, they do. And let's talk about why, and let's talk about the hard conversations I have in my job. Then it started transitioning to what do I really do? All they do, I was Miss Alleva's husband, that's it. And I knew how to take them to a dairy. But I think we do a huge disservice for our young people.
And then you let people go sign a debt that they can't get rid of to go to college.
That's a whole nother topic. That's another podcast on. Yeah, we almost force public education. And I have a huge affiliation for education. I've got 2 degrees and I still teach at the college that I attended. I think there's a right fit for it, but we've created so many avenues to get into college for a lot of folks that never wanted to go to college. And I'll tell you what, the service and trade industry is huge. You'll make more as an HVAC guy than you'll ever make as a farm credit lender. If you play your card, there's a lot of diesel mechanic. There are hands-on service industry jobs. The further and further we get away from our old school ties and we become more urbanized, the less people can handle any of that stuff. They've got to source out that maintenance and everything. That's just outside of agriculture. It's certainly within agriculture. But there's a lot of things. But no, we teach kids that the right thing is to go to college, whether you ever want to go or not. And we get you out of there with 40 to 200,000 in debt, wondering now what, when all along you really just want to be an electrician. There's other paths to get there.
Yeah. What are some resources that you would direct people to on finance and business and things like that, as far as some online course, YouTube channel, books, something like that, podcasts, anything?
Specific ones. There's so within CME's website, specific to commodity, there's some pretty interesting little video snippets about leverage and hedging and protecting yourself. But those snippets bring into a lot. When you talk about ag operation, talk about keeping equity in a yearling, there's some really good little, very, very short reels on there that are good. So all of the farm credit websites, Ag Texas, even on our website, any of the farm credit, we always have links to some informative articles about finance that you can go to and look at. A lot of those are super interesting. Quick reads, short things to get to. USDA, wealth of information. Everyone throws that around. USDA website has a tremendous amount from the publication of the Census of Agriculture data, which, can be an eye opener if you're thinking about getting into real estate investing or some of those things. You can look at the trends that are going on in that, to actual education back to debt and ag products. USDA's got a phenomenal amount of information. Those are some easy ones, but Google, I take the easy way out, but throw your question in there. Our AI resources now are incredible. ChatGPT, you can get some very specific industry analysis out of ChatGPT just with a search. And they're using it. My friends are in the business department at Tarleton. They're using ChatGPT now to both review, grade, and help produce business plan projects for students. So, it's a real tool. It can go out there and it can assimilate more data than any one website I can give you, and pull together some great resources if you're curious about an industry or an area or profit margins or projections. They're all out there. Texas A&M Real Estate Center, another one that you can find easily on the webpage. They have economic projections, both through real estate, through consumer debt, all things tied to consumer or real property, agriculture or consumer. I said that a couple times. They've got data on that and great slideshows that you can download. Cattle Facts, unlimited resources back to the commodity grain and cattle side. They've got some paid membership ones, and they've got a lot of free resources and publications on their website too you can get to.
Cool. How can people get a hold of you, all your services, all that stuff?
How can you get a hold of me? Not as easy as you're to get a hold of. I don't have all the cool social media stuff, but no, you can find me, Chad Alleva at Ag Texas. You can go to our website, get my email address. I'll be happy to share with you any of my contact information. If anyone wants to bounce anything off of me, I welcome an email anytime, a lunch, whatever I can do.
Yeah.
to help.
Awesome. Well, y'all go check him out. Like he said, he gave y'all a lot of resources to go check out. Do your research, get a business plan together, kind of know what you're going into, and then reach out to him and maybe he can help you get started in the business or give you a better deal than where you're at, or help you put all that stuff together. So y'all check him out, and we'll see y'all next time.
Thank you.
A mastermind has the sole purpose of getting you further, faster, and that's exactly what we're doing with the Wealthy Cowboy Show Mastermind. It is for the person that's ready to start out building their business, or someone just looking to get their business to the next level. We will have live Q&A calls that you can ask past and future guests questions that relate specifically to you. You'll also hear ideas and be able to network with people that could open you up to a completely different way of thinking that could change your life. Click the link below if you're looking to go to the next level in business and in life.